The luxury real estate market is collapsing. The housing market bubble pops, starting with luxury real estate and luxury homes, and then trickles down to regular houses. If you're anything like me, then you probably really enjoy browsing Zillow and looking around for multi-million-dollar mansions and luxury homes and just imagining what the future could be like. And you've probably noticed over the last couple months that the number of listings for these has spiked dramatically. If you're wondering why those luxury homes and million-dollar mansions are sitting on the market and piling up on Zillow at record rates, it's because the luxury housing market and luxury real estate is collapsing. Now, just to illustrate this point, let's take a look at the Seattle housing market. So taking a look here at Redfin, of the luxury homes listed on the market in Seattle, there's about 1,000 of them right now that are $1 million or more. More than half of them have been on the market for 30 days. Now, this was completely unheard of 6 months ago. So it actually is kind of mind-boggling to me today, just how far we've come and how fast this change has happened. And if you look at inventory on the market for more than 60 days, about a third of those homes have been on the market for more than 60 days. So the homes are just not selling. They're just not moving at the same rate that they used to. So just to show you guys what's happening here in Seattle, let's take a look at this data from Redfin that's showing the age of inventory in Seattle, Washington. So this is basically the number of days that the average home stays on the market. So the black line here is 2022, the orange line is 2021, and the blue line is 2019. I've filtered out 2020 because that was a wild year. But you can see that inventory levels were pretty low. So it's very seasonal, right? So generally inventories rise in the winter and then shrink during the spring and summer months when people are moving and buying homes. You can see that same trend play out here in 2019 and even 2021 and of course 2022. But look where the inventory levels got to. They got all the way down to 8.6 days. So this means in Seattle, the average home sold within 8.6 days. So that is absolutely insane. But from 8.6 days, remember about this time, March, April, is when the Fed started to increase rates. And you can just see this massive shift in inventory to where we're at now, 44.2 days on average on the market from 8.6. So about 5x where we were just a couple of months ago. So really seeing a crazy massive shift here in the age of inventory. And of course, as I mentioned, a lot of this is being driven by the luxury and high-end homes. I'm really curious to hear what you guys think. So take a second to comment down below and let me know what you think is the worst housing market right now for luxury real estate. Where is the luxury crash the biggest? And we'll get to that here in the end of the video. And while you're down there, don't forget to smash the like button and subscribe if you haven't done so yet. So I wanted to show you guys this article from the Wall Street Journal titled "The Luxury Home Market Posts Its Biggest Decline in a Decade." It's like crickets. After a pandemic-induced bull run, the high-end market has finally faltered thanks to inflation, recession fears, and rising interest rates. So there's a really interesting story here about a family or a couple in the San Francisco Bay Area. So let's read this. When Nancy Lamb upgraded in January to a home closer to her child's school in the San Francisco Bay Area, she thought she had plenty of time to list her old house, a 5-bedroom modern home in the sought-after suburb of Lafayette. After all, the pandemic had sent the luxury housing market soaring, and homes across the country were seeing aggressive bidding wars and selling for sky-high prices. Ms. Lamb, a business professor, and her husband, who works in healthcare and declined to be named, took their time sprucing up the house in a bid to get the best possible price for the home, which they had bought for $1.67 million in 2014. But after listing it for $3.95 million in May, so look at that, that's more than double what they bought it for in the span of 8 years. They realized they may have miscalculated. After weeks on the market, the house hadn't been scooped up like they expected. There were no reasonable offers and no bidding wars. Now, 4 months and 2 significant price cuts later, the property is still lingering on the market, asking $3.49 million. It's crazy, she said. We never expected for this to still be on the market. It really caught us by surprise. And again, as I've showed you guys what's happening with the Seattle real estate market, things are just as bad there, if not worse. So this is definitely not an isolated event. If somebody was trying to sell their luxury home in May or June, it definitely was a completely different market than what was out there in January or February. Experts say stories like Miss Lamb's are becoming increasingly common as the luxury housing market cools following its pandemic-induced bull run. A new report by real estate brokerage Redfin shows that in the 3 months ending August 31st, sales of luxury U.S. homes dropped 28.1% from the same period last year. That marks the biggest decline since at least 2012, when Redfin's records began, and eclipses even the 23.2% decrease recorded during the onslaught of the pandemic in 2020. And just to prove the point that it starts off with luxury real estate and not the other way around with lower tier or entry-level homes, sales of non-luxury homes also fell during the same period, but that drop, 19.5%, was smaller than the decline in the luxury market, which is defined as the top 5% of homes based on estimated market value. 6 months ago, people were buying homes over ask and with no appraisal. They didn't bat an eyelash. Now it's like crickets. Now, I hope you guys had a quick second to comment down below what you think the worst housing market is for the luxury home crash. And that market is Oakland, California. So sales have plunged 64%. San Jose and San Diego have decreases of more than 55%. And then 44.3 in LA, 55 in Miami, and only 11.8 in New York. Now this is a great graph showing the data that we saw before about the year-over-year change in luxury home sales. So you can see pretty flat, slight increase. So this means the market is growing. And then 2019, some dips. And then here we see the pandemic starts and a massive dip, down 23%. And then just absolutely the market skyrocketed. So from May of 2020 to May of 2021, we saw a 79% increase in home sales in this market. And then now we're down to 28.1% below where we were from a year ago today. So massive drop off. And again, this is due to a number of factors, right? But the two biggest factors here are the massive increase in rates, number one, which is just absolutely killing housing affordability and home affordability for most people. So if you take a look at what a mortgage would be on just a regular non-luxury $400,000 home at a 2.5% interest rate, your payment was about $1,500. And this would have been something you could have gotten in January or February. Now, just a couple months later, with rates at sky-high levels at 7.5%, that same exact house for the same price at $400,000 mortgage, you're paying about $2,700 a month. So $1,200 increase, that's almost double what you would have been paying literally 6 to 8 months ago for the same exact house, and all that extra money is just going to the bank. So, I think that explains a lot why the market is slowing. And of course, we know from Jerome Powell and the Fed that these rates are going to continue increasing over the next couple months. So there's really no end in sight, at least through the end of the year. Clearly rates are going to continue to climb. All right, guys, thank you so much for watching. If you want to see more great real estate content like this, make sure you subscribe to my channel so you don't miss any updates. And if you want to see why Zillow has finally admitted that the housing market is crashing, click this link right here.